concentrated fund is a portfolio of our highest conviction ideas. It's a 30 to 40 stock portfolio that represents our portfolio manager's best ideas based on the 4 criteria that we look for in our investment process and philosophy. So we have a very unique investment process and philosophy that is focused on identifying companies that are exhibiting an acceleration or improvement in their growth rate, or we believe that growth will be sustainable for at least a 2 to 3 year time period. There are 4 key criteria that we look for when investing in a company. The first is, do we see an inflection in earnings growth? An inflection in earnings growth can be triggered by multiple factors. It could be a change in a management team. It could be a corporate restructuring. It could be a new product cycle. It could be any sort of fundamental metric that our analysts and portfolio management team can put together and build a mosaic, a strong case that this company will show an inflection in earnings growth. The second thing that we look for is this growth sustainable for at least a 2 to 3 year time period? And this is where really the core of our process comes into place. The foundation of the process is deep and thorough fundamental research. We have a team of very experienced analysts whose strength is digging deep into the weeds of the company and understanding all aspects of what's driving the company's growth. The third thing that we look for is what we refer to as an earnings gap. So part of our analysts' very thorough research is that they build their own earnings models. They come up with their own earnings estimates. They compare their earnings estimates to the street estimates. They want to see, where do we understand that the street is underestimating the company's ability to grow? Do we see the ability for the company to generate earnings higher than what the street is estimating? This is what we refer to as a positive earnings gap. This is very important because when we can find a positive earnings gap, that is typically what leads to a company being able to report an upside earnings surprise, which leads to upward earnings revisions, which leads to PE multiple expansion. And that re-rating of the stock price is an important driver of stock price performance. So the fourth criteria that our team looks for is risk-reward. This is where valuation comes into play. We want to understand what is the market pricing into a stock based on earnings expectations, and we do this by looking at PE to growth rate. And we want to make sure that we find a stock that's trading at an attractive valuation relative to what our expectation is. So what constitutes a high conviction idea for our portfolio management team is a stock that meets all 4 of these criteria, where we have very strong evidence of earnings acceleration, strong evidence of sustainability in the growth rate, a very strong earnings gap and confidence in our earnings model, and a very attractive risk reward. We believe the concentrated portfolio is an excellent investment opportunity for those investors with a longer-term time horizon who are willing to take on the short-term volatility for the benefit of higher excess return or higher alpha generation over a 3 to 5 year time period. The benefits of the concentrated fund is that you have a very experienced portfolio management team that is adept at making decisions and finding the best ideas, whether they reside in the US market, the European market, the Japan market, or emerging markets. This portfolio, we expect the alpha generation from this portfolio to be 300 to 400 basis points over a market cycle.